Is Bitcoin gradually becoming a financial tool controlled by those in power? This is no longer a far-fetched hypothesis, but is slowly becoming a reality. Let me give you a test. If you could choose between 10 Bitcoin and $1 million in cash right now, which would you pick? Most people would choose cash because of its immediate usability. It can be spent, invested, or saved. Meanwhile, Bitcoin is still considered a highly volatile digital asset that can generate value overnight. Recently, Bitcoin's price dropped below $80. But what if, in the future, economic leaders declare that Bitcoin will reach $200,000 or even $1 million while the US dollar continues to decline in value? Would you still consider cash the safest option? Think back to 2008 at the start of the global financial crisis. At that time, having $1 million meant you were considered a millionaire, able to buy undervalued assets as the market crashed. But if, at that moment, I had offered to trade 100 Bitcoin to get your $1 million, you would have thought I was insane. Back then, one Bitcoin was worth just 0.03 cents, and most people didn't believe in its value. However, 10 years later, those 100 Bitcoin skyrocketed to $10 million. Now, if you want to trade $1 million to get my 100 Bitcoin, who is really making the mistake? We cannot be certain about the future, but one thing is clear. The US dollar is steadily losing value, while Bitcoin continues to grow. Some people believe Bitcoin will keep thriving because of its decentralized nature, but in reality, there are increasing signs that it is falling under the control of major financial institutions. Is Bitcoin still an independent currency, or is it gradually becoming a tool in the hands of powerful entities? The US once strongly opposed Bitcoin, but now it is one of the most active countries in accumulating it. Some reports even suggest that the US might be selling gold to buy Bitcoin, strengthening its financial position for the future. If this is true, then at some point, the US may begin using Bitcoin as part of the international financial system, gradually replacing traditional financial instruments. When this happens, global financial policies will undergo major transformations. Traditional investment channels such as stocks, real estate, and gold may no longer be the best options. Instead, Bitcoin could become the most valuable asset. Once Bitcoin is no longer restricted by political and legal barriers, it will spread worldwide. And whether you like it or not, eventually, you will have to own Bitcoin as part of your assets. Have you ever wondered if what we know about finance and currency is truly accurate? Today's video might challenge your worldview and financial beliefs. I understand that some similar channels may monitor what I say and then copy it. But that doesn't matter. You can choose to ignore this, or you can take a few minutes to listen. If this information helps you gain more knowledge to protect your assets in the future, then I have achieved my goal. The financial world is undergoing a major transformation. For years, the US economy has relied on continuous borrowing and money printing to sustain growth. But at some point, this model will no longer be effective. Interest rates are rising, yet US government bonds are losing value significantly. What does this mean? It indicates that investors are losing confidence in the US government's ability to repay its debts. As a result, they will seek alternative assets to preserve their wealth. Many people once believed that gold was the safest haven. But what if I told you that even gold might no longer be the best option? The US may be selling its gold reserves to buy Bitcoin. If this is true, it suggests that Bitcoin could play a crucial role in the future of global finance. Amidst this financial uncertainty, Bitcoin may emerge as a viable solution. Why? Because Bitcoin is the only asset that cannot be controlled or manipulated by any government. As confidence in fiat currencies declines, Bitcoin will become an increasingly attractive alternative for both investors and governments. What I'm sharing with you is not meant to convince you to buy Bitcoin, nor is it meant to create fear. I simply want you to seriously consider the changes happening in the global financial system. Whether you believe it or not, a new game is beginning. Those who understand the situation will have the opportunity to protect and grow their wealth. Meanwhile, those who ignore it and assume things will remain the same may be left behind. So the real question is, will you stand on the sidelines, or will you educate yourself and seize the opportunity before it's too late? In reality, multiple reports suggest that the US has been actively accumulating Bitcoin. Some even speculate that the government is selling off its gold reserves to acquire more Bitcoin. If this is true, it could mean that the US is preparing to integrate Bitcoin into its financial system, or at the very least, using it as a safety net in case the US dollar experiences severe devaluation. This could lead to a major shift. If the US and other leading economies start recognizing Bitcoin as a strategic asset, it will become an essential part of the global financial system. At that point, traditional investment channels such as stocks, real estate, and gold may lose their appeal. Instead, Bitcoin could emerge as the most valuable asset of the future. The consequences of money printing, a never-ending cycle. Money printing is not just a temporary financial solution. It brings severe long-term consequences. Whenever the market shows signs of weakness, instead of letting itself correct, the Fed often resorts to money printing and lowering interest rates to inject liquidity, making it easier for businesses to borrow capital. But each time the supply of cheap money is withdrawn, the market immediately plunges into chaos and severe downturns. Over the past decades, every time a crisis occurred, the Fed had to use money printing to support the economy. In 2001, when the tech bubble burst, the US only needed to cut interest rates by 5% to stabilize the situation. In 2008, even after interest rates dropped to zero, it wasn't enough, forcing the government to inject $3.7 trillion into the economy. In 2013, more money was printed. By 2020, the scale of money printing reached an unlimited level to combat the COVID-19 pandemic. The alarming reality is that if another crisis happens, even reducing interest rates to negative levels, where borrowers are actually paid to take loans, may still be ineffective in reviving the economy. Look at Japan and Germany, two countries that experimented with this policy, only to see their economies stagnate. In the end, the only option left for the Fed is to print more money. However, the more money is printed, the more the US dollar loses value, leading to skyrocketing inflation. The worst-case scenario? The US economy could collapse into a Zimbabwe-like situation, where even hundreds of billions in local currency are not enough to buy a meal. More importantly, the US will accumulate massive debt as the country not only prints money to support the economy, but also borrows against it to sustain spending. With excessive money flooding the market, there must be a safe haven asset to absorb this liquidity. If not, the enormous amount of money circulating will create financial bubbles, leading to severe risks. In the past, two primary assets served this purpose: US stocks and gold. Every time the US printed money, stock prices and gold surged, as they were seen as safe investments. But this time, things have changed. Since 2020, the US has printed money at an unprecedented scale. If more money is printed, the economy will face extreme inflationary pressure. Therefore, a new asset is needed to absorb the massive influx of US dollars. Bitcoin could be the solution. When people hear the idea that Bitcoin could become a reservoir for the massive amount of money the US prints, many will laugh and dismiss it as an unrealistic hypothesis. Clearly, Bitcoin has a limited total supply of only 21 million coins. Even if the value of each Bitcoin rises to $150,000, the total market capitalization would only reach around $3 trillion, an amount that doesn't even surpass a corporation like Microsoft. Calling Bitcoin a reservoir is like calling a foot washing basin a water storage tank. Even in the most optimistic scenario, where Bitcoin reaches $1 million per coin, its total market cap would still be around $20 trillion, equivalent to the combined value of the top 20 companies in the US stock market. With such a scale, Bitcoin cannot serve as a massive liquidity reservoir for the US dollar. However, the story is not that simple. One reason many people believe Bitcoin cannot absorb such a vast amount of money is because of its fixed supply. But this is only true if we talk about physical Bitcoin. Let's compare it to other finite assets like gold or oil. When you buy gold or oil, you actually own the physical commodity. Since these resources are limited, once they are fully purchased, there is no more left for trading. This creates a natural cap on the size of these markets. Bitcoin is similar in that there are only 21 million coins, but the key difference is that if you don't buy real Bitcoin, but instead invest in financial instruments like Bitcoin ETFs, futures contracts, and derivative products, then theoretically, the supply of Bitcoin can become unlimited. What happens if most investors do not directly hold Bitcoin, but trade it through derivative products instead? When you buy a Bitcoin ETF, you don't actually own Bitcoin. You just hold a paper certificate that represents the value of Bitcoin. If Bitcoin's price increases, the value of that certificate also rises. You can then sell it on the market to profit from price fluctuations without ever actually owning Bitcoin. This means that it is not Bitcoin itself, but Bitcoin derivatives that truly act as a liquidity reservoir for the US dollar. In the past, the US government was highly cautious about Bitcoin, even going as far as banning or restricting cryptocurrency-related transactions. However, in recent years, they have begun to approve Bitcoin ETFs, allowing Wall Street money to flow into this space. Although Bitcoin is still not fully legalized, the US is opening up opportunities to control this market through ETFs and financial derivatives. This means if the majority of investors choose to buy Bitcoin ETFs instead of physical Bitcoin, then Bitcoin will no longer be decentralized as it was originally intended. Large financial institutions will gain the power to regulate Bitcoin's price through investment funds and financial instruments. Another crucial factor is that all financial products related to Bitcoin must be purchased using US dollars. This makes Bitcoin increasingly tied to the traditional financial system, much like gold and oil once were. Previously, the US dollar was backed by gold, making gold a safe haven asset that reinforced the dollar's value. Later, the dollar was used to buy oil, leading to worldwide dollar reserves to facilitate energy transactions. In the future, if the US dollar can be used to buy Bitcoin, what will happen? If the world adopts the dollar as the primary means of transacting Bitcoin, then no matter how much money the US prints, the dollar will retain its value because everyone will need it to access Bitcoin and the cryptocurrency market. Is the US really drowning in debt, or is it just a financial chess game? Many people worry that the US is burdened with an enormous $36 trillion in national debt and will never be able to repay it. But is the reality that simple? Let's break it down. Of the total $36 trillion in public debt, 75% is internal debt, meaning it's money printed by the US government and borrowed from itself. If a country borrows from its own central bank, can it really be called debt? That leaves only $9 trillion as foreign debt, the amount the US actually owes to external creditors. In theory, the US could simply print more dollars to pay off this debt. But if it does so excessively, the value of the dollar would plummet. Imagine lending money to someone, and instead of earning it back, they just print more money to repay you. Would that money still hold its original value? However, the reality is not that straightforward. As long as the world continues to need US dollars to buy Bitcoin, gold, oil, and other assets, the currency will retain its value. Moreover, the US does not need to repay the entire debt all at once. It only needs to make regular interest payments, which helps maintain confidence in the financial markets. Countries around the world need dollars for foreign exchange reserves, but holding cash alone doesn't generate returns. So, they buy US government bonds, allowing them to hold dollars while earning interest. As long as the US keeps paying interest on time, global investors will continue buying its bonds, creating a cycle that sustains America's financial dominance. One interesting point. Former President Donald Trump once suggested that Bitcoin could be used to pay off national debt in the future. It may sound far-fetched, but could this scenario become reality? A strategic move in a volatile market. When Bitcoin crossed $72,000, I started accumulating gradually. Not just Bitcoin, I also considered stocks, gold, and other assets to diversify risk. Currently, my average entry price for Bitcoin is around $99,000. If Bitcoin breaks above $100,000, it would be a crucial psychological level. If buying momentum is strong, I may increase my position, but with caution. Before making any trade, I always plan stop loss and take profit levels. This ensures that I protect my capital even if the market turns against me. For example, if I buy at $100 and the price rises to $105, I will adjust my stop loss from $95 to $100. If the price falls back to $100, I break even instead of taking a loss. This strategy minimizes risk while allowing for profit potential. When Bitcoin hit $10,000, many people thought it was overpriced and missed out. Then it skyrocketed to $100,000, only to drop back to $76,000. If you thought $76,000 was too expensive, then guess what? It's now approaching $90,000. People who keep waiting for the perfect price often get left behind and never invest. When they fail to make money, they start calling Bitcoin a scam or a bubble. The truth is, those who understand the market and manage risk properly are the ones who actually profit. Will you stay on the sidelines, or will you seize the opportunity? Even though Trump has returned to the White House, not all of his powers are fully in his hands just yet. However, don't mistake that as a limitation on his influence. In reality, his strategic decisions are still shaping the financial markets and could completely change how we perceive Bitcoin. If you once thought Bitcoin was worthless, take a closer look at what Trump, Elon Musk, and their teams are doing. There's one thing all the key figures they've recently recruited have in common. They are all Bitcoin supporters. A clear example, Trump's newly appointed financial advisor has proposed selling off U.S. gold reserves to buy Bitcoin. Trump himself has even publicly advised people not to sell the Bitcoin they own. What does this mean? What are they preparing for? Just 1 or 2 years ago, Trump dismissed Bitcoin as a scam, a Ponzi scheme with no real value. After all, Bitcoin is just a string of encrypted data with no tangible assets backing it. If you tried to use Bitcoin in a country like China, no one would accept it because the law doesn't recognize it as a legitimate currency. But what if, in the near future, the US government officially backs Bitcoin? What if Bitcoin could be legally converted into US dollars? Sounds far-fetched? Then let's look at reality. The US government is accumulating Bitcoin. Tech billionaires are betting big on Bitcoin. Major financial institutions are pouring money into the crypto market. This all leads to one conclusion. A major shift is happening, and those who understand it early will have the advantage. Does Bitcoin have real value? Does it have clear applications? Can you physically consume it? None of those questions actually matter. What matters is how many people believe it has value. Look at the US dollar. It's just a piece of paper at the end of the day. But why can that piece of paper be exchanged for gold, oil, and goods all over the world? Because the US government backs it. Bitcoin is no different. If a country like the US is willing to buy Bitcoin with real money, if Wall Street and the US government are accumulating it, what does that tell you? It tells you that you, an everyday individual, now have the chance to own the same asset that the most powerful people in the world are stockpiling. Will you take that chance or be left behind? Some people might say, I'm not buying Bitcoin. But whether they buy it or not doesn't change a thing. Individual opinions are irrelevant because nations, financial funds, and major investment institutions are pouring money into this market. This is a game for the sharks, while you are just a small retail investor. And when the sharks accumulate enough, the price is bound to skyrocket. At that point, you'll see Bitcoin breaking new highs, the excitement spreading, and other small investors rushing in to buy. This works exactly like the stock market. Most people don't buy stocks because they believe in the company, but simply because they want to profit from rising prices. Bitcoin is no different. Right now, the US government holds over 200,000 Bitcoin, making it the largest Bitcoin-owning nation. But what's interesting is that they didn't buy these Bitcoins from the market. They confiscated them. If someone uses Bitcoin for money laundering, tax evasion, or illegal transactions, the US government has the power to seize those assets. With military bases and legal authority spanning the globe, the US can confiscate Bitcoin even if the owner flees. What does this mean? The US can buy Bitcoin with real money while also seizing it from others. And once they hold a significant amount, they can manipulate the market at will, driving prices up or crashing them whenever they choose. The US government doesn't need to sell assets or print more money if they can simply cash out from Bitcoin. Imagine this scenario. Bitcoin prices are pushed to new highs, creating a FOMO, fear of missing out, effect across the market. Once enough buyers step in, a massive short-selling wave crashes the price. Money from small investors instantly flows into the pockets of those who shorted the market. So, is this just a financial game, or is it truly a monetary revolution? If Trump can support Bitcoin, could he do the same for Dogecoin or another cryptocurrency? In the long run, I believe Bitcoin will continue its explosive growth. I'm willing to break mental barriers and accept the possibility that Bitcoin could reach $200,000 or even $1 million per coin, especially as the US continues printing money without limits. But in the short and medium term, Bitcoin might become a cash machine for those in power. That's why I will trade Bitcoin based on my system. If the market shifts, I will move to gold or stocks. I rarely hold on to any asset long term, except for real estate. The reason is simple. We, small investors, have more flexibility than the sharks. We can move assets quickly, follow trends, and trade based on smart strategies. Time is limited, so I'll stop here. I share free knowledge about investing, business, and financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video. Finally, I want to send my best wishes to everyone who hit the like button. I hope you achieve financial freedom soon. If even one idea from this article gives you a new perspective, then I'll consider my job well done.